Hello traders, good evening. Today you might have seen that the market suddenly dropped at around after 12:30. What if I tell you that we will be able to anticipate this move, and probably we would, at least if not able to take positions on the short side, at least we would not be able to take a long positions, and it would save a lot of our losses. Welcome back. This is Mohit, and you are with Trade Smart with Mohit. Today, I'll be discussing an important, I would not say a strategy, an indicator which used effectively, it will give you consistent returns. Now, whenever we are talking about the strategy, understand none of the indicators or none of the strategies are loss proof. Now, when we are using an indicator, I would give you those indicators which have more probability of giving you right signals. The probability of the trade is more important than you being profitable every day. Now, every day a trader being profitable is very rare and almost next to impossible. Now, what we are doing is that in the previous video I had taught you about VWAP, volume weighted average price, how we are going to couple that with the double EMA crossover. And today we'll be discussing about that only double EMA crossover without the VWAP. So whenever I see about the double EMA, understand that there are two exponential moving averages which we will be using. And for today's trade, as you are already seeing, I have taken Nifty to demonstrate how this works. This is a trading view chart, or else you can go to any of the chart which your broker has given. Watch till the end, because although you might be using this strategy, I might say something new, or at least it will be a revision of what you already know. So if you are very new to the channel, do consider subscribing it and click on the notification, because once in every 3 days I post the videos on strategies, or at least I would be posting on the sessions from basic to the advanced technical analysis course itself. Today our main focus is moving average. Now, when I say moving average, I've already put the moving average for you. Now, say suppose if I have to delete this moving average, and let me start from once again from afresh. So this is the functional indicators. What I do, I click on the FX or the indicator, and then what I do is I click on exponential moving average exponential. I click on this and I double click on this because we need two. By default, it takes about 9 EMA. Now, when we are an intraday trader, I would generally be talking in with respect to intraday traders, but however, this analysis or the indicators, you can use it on any time frame, because the indicators and the technical analysis itself is fractal in nature. What do I mean by fractal is that you can use it on any different time frame, it will still work. You can use it for commodity trading, you can use it for FX trading, you can use it for crypto trading, any instrument, or probably you can also use it for a stock trading as well. This I particularly trade with Nifty, so that's the reason I am showing you the Nifty, and this is where I trade. So end of the month, you always see my profit and loss statement, verified P&L, which I posted. Whether I make profit or loss, it will be honestly showed to you. If you have not seen my P&L statement for the month of May and June, it's already there in my YouTube channel in the verified P&L statement. You can go and check that out. So this, as you can see here, there are two EMAs, exponential moving average. One is 9, the other is also 9. 9 we will just retain as it is, and the other one 9 we would change it in 21, because we need two moving averages. One is fast, the other is slow. The slow moving average is the one which has a longer duration. Now, when I am saying 21 period, this is the input. I just change it from 9 to 21 and I click on OK. Alright, and now here again I need to be able to differentiate between the 9 and 21. Now, usually what I say is that when the slow moving average, that is 21, is above the fast moving average, that is a 9 EMA, there is a sell signal, or at least there is a bearishness. You should not be buying into the market. Now, preferably, or else everyone would say slow, we would just put red or any color which you prefer. So what is happening here? The first rule is that this is the 9, this is a slow moving average. Whenever the slow moving average is above the, fast moving average is above the slow moving average, you need to look for opportunities to buy. Now, when do I enter a trade? Usually, I prefer to enter a trade on the third candle. On the third candle, I'm talking about a 5-minute candle. On the third candle, once we have seen a crossover. Along with that, I always see support and resistance. the price action. Although it seems very simple, support and resistance is very effective. I will teach you support and resistance as well and the price action in this video. One simple thing is that you need to be able to use a simple strategies or simple indicators in a professional way, like how the professional traders use it. You don't need to know exorbitant strategies. That is not needed. Use one strategy, probably day in and day out, and do that repetitively and maintain a journal. That's how you're going to improvise your trading. If you have 100 different strategies, which will not work, because every strategy is bound to fail at one point or the other. If you have seen any strategy which works, and just put that in the comment section. Every strategy or every indicator has a probability. When I say if your winning indicator, if your indicator strategy is at least 40% profitable, but your risk to reward ratio is 1:1:5, you would still be profitable in the market. Last month, if you have seen, I still was able to make about 12.5%, although the success ratio was 50-50, and I was able to take only 10 trades in the entire month. Today I am speaking particularly of the double EMA crossover. Now, what is the rule is that when the 9 EMA crosses above the slow moving average, you need to buy. There is another rule, and one more I told you to add it, is that you need to enter the third candle. Now, what is the third candle? Probably this is the third candle. Now, there is one more thing I generally tell. Between 9:30 to 11:30, the market gives a trend. 9:30 till 11:30, that is 1.5 hour, 2 hours, it gives a trend. From 11:30 till 1:30, the market's usually sideways. From 1:30 till 3, the market can either continue the trend, which it was already established between the first half, or it can reverse it. Just keep this in mind, because these time frames are very important if you are particularly an intraday trader. You need not bother much about the intraday volatility if you are a swing trader. All right. And what happens? What is the second rule? The second rule is that what if the 21-day exponential moving average, as you can see here, there was a crossover at around 12:20, 12 o'clock itself. There was a, here it was a crossover. The timing, let me expand it and show it to you. Here it is 12:25. There was a crossover. Third candle, I need to be shorting this. Had you gone short here, so this is 24,170. And it made a low of 24,010. You can see here, when I point the cursor, just see this. Okay, now it becomes more visible. See, this is the lowest candle for the day, 24,010. Now, usually would have made about 150, 160 points. Consider the slippages, at least you would have been able to make 100 points. This is one of the indicators which used effectively can give you the probability of the profits would increase. I would not say you would make consistent profits. That's a wrong way to put this across. Now, I also told you that I will also be teaching about the support and resistance. Understand this. What is the support here? This is the support. 24,171 is the support. Now, let me draw this line. 24,171. This is the support for today. Now, what happened is that there were two confirmation signals we have noticed today. One is a double EMA crossover, the 21 exponential moving average above the fast moving exponential moving average, that is a 9 EMA, that gives a bearish signal. At least you would not have been buying in this market. After 12:30, you should not have been staying. Plus, there is a break in this resistance. Now, when I say this resistance is broken, where is the other support? There is no support till this candle. This is clearly shown here. 24,027 is the support. 24,027 is the support. Now, the support candle, usually we put that in green. See this. This is a wonderful way of showing two things which we have used. One is an 9 EMA as well as a 21 EMA, double EMA crossover, and support and resistance. When I talk about the resistance or when I talk about the support, is always the first red candle. Now, which is the first red candle before this candle? Which is the first support before this? That is, can you find a red candle which is below this? Okay, here it is one, but this is above this one. So this is definitely not the support, which is 24,185. It has broken. So it will by default move towards the support candle. What is the support candle here? 24,027 is the support candle. Now, okay, fine. This is the support candle. Now, what happens if I would again let us extrapolate this and see. What if there is a crossover here, that is the 9 EMA goes above the 21 EMA? Imagine what would be my first target. My first target would be the first green candle. First green candle, say suppose, imagine that by the time the crossover has happened, we are about 24,107. So which is my next target? Needless to say, naturally, it is the first green candle before this. Now, what is the first green candle? And it should be above this one. Like in resistance, it should be below this. That is the support. And in here, the resistance, it should be above this. The first candle is this one, 24,161. So if there is a crossover, and if we have to set the target, we will be setting the target to 24,161. So this is a small video on EMA crossover along with conjunction of support and resistance. Now, although it looks very simple to use, trust me, it is very effective if you have patience and discipline to execute such trades. And I have seen many people using Hikanashi. One quick tip on Hikanashi candle is that Hikanashi, it helps to reduce the noise. Now, when I just transfer this one to Hikanashi, it helps to reduce the noise. We can see that, okay, fine. But don't use Hikanashi, that means average in Japanese, to enter a trade or exit a trade, because you would not get the exact levels. So what you are supposed to be doing, once you take a trade, shift to Hikanashi, already have your target in place. Before entry, you must know what should be your stop loss and what should be your target. Like I told you, 2 double EMA crossover has happened. Fine, you need to take short. When do you take short? You take short on the third candle after the crossover. Let me shift back and let me again reinforce this logic to you. The crossover has happened. You wait for the third candle. 5-minute EMA is what we are talking about. The period is 5-minute EMA. You go short here. What should be my target? My target is, if it is already broken the support here, the first red candle before this, and the red candle must be below this. So this is the support. 24,027. It came here, tested the support, and the entire day it was above it, because this is a very strong support, as we can see here. Many a times the market has reversed from 24,000 levels. That's a strong psychological support as well. So this is how you use EMA along with support and resistance. And however, I would be making a different video on support and resistance and how to use them professionally as well. So if you like this video, do give a thumbs up and put that in the comment section if the strategies or the way which I am explaining it to you is useful to you, and do share it among your friends who want a simple and a clear way of explaining or understanding things better. I am posting the free courses from the basic to the advanced technical analysis. You can check in my playlist. It is a foundation course. The title is foundation course, and technical analysis I have posted it separately. That's it guys, and you have wonderful trading days ahead. Bye bye.